Everyone, I'm Dinesh, and you're listening to the Rain Matter podcast. This past year has been spectacular for the venture world, for both founders and VCs. We're seeing record number of startups, record amounts of funding, record number of unicorns, basically record number of records. Given this frenzied environment, we're still trying to make sense of all that has played out in the past year. So we caught up with Sriram, senior correspondent from Moneycontrol. Sriram has been covering the startup and VC space for a while now and has a unique vantage point into what's happening. This was a really fascinating conversation, and Sriram had a lot of insights to share with us. Please enjoy a conversation with Sriram of Money Control.
Sriram, thanks for joining us on the Rain Matter podcast. It's great to have you here.
Thanks a lot. Happy to be here.
Yeah. So we have a lot to talk about today in terms of your experience with venture capital and startups. So before we get to that, why don't you tell us a little bit about your personal journey so far? What made you get into financial journalism? How your journey has been, leading up to where you are today?
It's in some sense relatively straightforward. So I've been into writing for as long as I can remember, to the point where even in school, other subjects used to be a hit or miss depending on whether I studied or not. English was not something I ever had a problem with. I, in fact, used to, look forward to the English exam because I would just get to write a lot. And so when we used to write our English grammar paper, we were told that you should take 30 minutes for your essay, take 25 minutes for grammar, and take this time for comprehension. No, I would flip that around to say, I want all my time to write my essay. So you finish all the other stuff in the exam in, say, 20 minutes, and then you take like 1.5 hours to write, the composition to end your life, because that is just something I would do with that much passion. And so that love for writing was always there. After that, I was always into finance because I did my BCom. I did a lot of additional courses in finance during that period. And so if you think of, as a person who is interested in finance and interested in writing, financial journalism is kind of the automatic place where that ends up. So, which is why, a few years back, I did my postgrad from the Asian College of Journalism, which had also just started a special financial journalism program in partnership with Bloomberg. So, where we had editors from Bloomberg who were interacting with us constantly. We were using the Bloomberg terminal all the time. So, that kind of exposure early on, even as you're studying, just changes your mindset entirely as a journalist. You start to think of things much more widely. You don't always look at the small picture. You're always looking at the bigger questions, and that kind of perspective is important. From there, I joined Mint, where I worked for 2 years, where I mostly worked with the deals team, but where my coverage was still gravitating towards startups. After which, just when the pandemic was starting, I moved to Money Control.
Nice, nice. No, thanks, Sriram, for that background. Now, I think this whole startup space, I think, has had like a revolution over the past year. And I think you had a front row seat with reporting all of these news around all the fundraisers and all the venture capital funds that have been raised over the past year. How did that happen? As in, did you have like a conventional entry into this space, or is there a story behind how you ended up covering the VC space particularly?
Yeah, so I got lucky, to be honest. So I was always very interested in covering tech as a sector, and tech means everything around it. So that goes from startups to big tech companies to their investors and all of that. That's something I've always been very interested in, even before I became a journalist. When I joined Mint, I was with the deals team. As a team, we cover deals as a whole, which includes private equity, venture capital, structured finance, NBFCs, credit, all of that. As part of that, I was doing a little more of venture capital work simply because nobody else was there to do that. We already had folks who were experienced in private equity, etc. So I didn't have much of a value add there. So venture became my beat, as we call it in journalism. And that's something that I just picked up on. So I got very lucky with that. The fact that I was interested in this and it got handed to me. So I was able to pick up on that, build up my own coverage, write in a specific way, look at interesting themes. And that's what I've stuck to. So in the early days of Mint, I used to juggle with overall deal work. Then that became focused, to startups and venture capital towards my later phase at Mint and totally at Money Control, where this is the, objective of my coverage.
Got it. And I think one other question that we were all very curious to ask you was around this whole financial media space, right? I think there's a lot being talked about globally and particularly about India. From the outside, I think for all of us, I think it seems like, this mainstream outlets are kind of struggling. There have been lots of developments in terms of unbundling, etc. Like, how do you look at that particularly? I think that's something that I'm sure you would have discussed internally with all your colleagues at Moneycontrol. So we were very curious about hearing from you about those views too.
It's an interesting question because, and the reason it's interesting is because both sides of it are absolutely true. Are a lot of, media houses struggling? Yes. But is this also a more fertile time than ever to be in the media space? Also, yes. The amount of innovation that we're seeing today in terms of new publications, new products, new initiatives, new ways of approaching a user, that's something that we've never seen before. So even at Money Control, our mandate constantly is to tell a story, the way a story needs to be told. And it's not always via text, the way a newspaper would. Sometimes you do it via charts, sometimes you do it via podcast, which is why I run this show on Twitter Spaces. Sometimes you do an interview, you do a Q&A, sometimes you go on TV. So at least from a journalistic standpoint, I think it's very, very important to be comfortable across all mediums. Now that's not something that comes naturally. It's something you have to work on. But I do think if you have to be relevant, then that is the need of the hour.
Yeah, I mean, Sriram, just a follow-up question to that. I mean, so you have a lot of unbundling happening in terms of, say, journalists starting their newsletters,
Hmm.
right? You have a Substack or a Scroll Stack, which makes it very easy for journalists to put out their own opinion based on, I mean, whatever their sense of the way the world is heading, right? So, I mean, how do you think this trend will affect the industry going forward? Do you think this could have like, potentially have a large impact and change the way the journalism industry works, or do you think this is more of a value add, a passing phenomenon in that sense?
It's harder to forecast where it'll really go, but I would certainly hope that this, revolution is here to stay. The trend of, Substacks and newsletters and people offering their individual voices, simply because as a reader, I quite enjoy that. As in, if there is a qualified journalist, somebody who really knows what he's talking about, if he's able to lend his own perspective, his own bent to it, without being biased, but just what happens is if you're able to give the story some color rather than just being, that mere facts and just stick to that, that becomes very dry for, any reader. So as a reader, that is something I'm very excited by. So which is why a lot of what I read, a lot of these newsletters, and I read more of the newsletters that come from the valley. In India, I haven't found too many, one or two here and there, especially for that startup and tech space. So I do think that's here to stay. But you have to then look at, how will this be monetized? In India, are there enough people ready to pay for something like this? Like some of the newsletter guys in the valley put out their year-end stats in terms of how many people subscribed, how many new people came in, how much they're paying, etc. And the numbers are not bad. They're not bad at all. I mean, I can't remember it on the top of my head, but and some of these are, people who quit jobs at Bloomberg to start their own newsletter. So it's a very entrepreneurial venture in that sense. That kind of thing in India, will it pay off is harder to tell. But from a reader standpoint, I think it's very exciting to do that.
But I mean, the counterpoint again to that is, lesser editorial control, right? It's potentially possible for lesser quality journalism to be going out simply because there are lesser controls now. Anyone can choose to put their voice out to the world. Do you have any thoughts on that?
You're right, Viraj. You're right. That's a very good point, which is why I started out by saying this has to come from somebody who's experienced and somebody who doesn't have bias. So you're right. The flip side is you can also say tomorrow, if you want to start a right wing Substack or a left wing Substack, that can work out very well for that individual person. And there are also enough people to consume that, of that particular bent. But if you're somebody who's sort of centrist and who's genuinely interested in telling unbiased but interesting stories, then that is also the best way. Because sometimes publications have their own biases. Sometimes it's not just biases. In large publications, there's also a whole process you have to go through if something big has to get approved. You can cut through the clutter if you're doing it by yourself.
Got it, got it. No, I mean that's very interesting. I was potentially wondering if somewhere down the line you have roll-ups, roll-up sort of entities who congregate a lot of these popular Substacks, and I mean maybe potentially that's the way to monetize this, right? I mean, do you have any thoughts on that?
Monetizing, I think the best model right now out there is something like what the Morning Brew does, where it is advertiser funded. It's not that it is subscription funded, but the advertisements are also done very smartly. It's a very visually appealing newsletter, which I think is very important for a newsletter. Like a newspaper may not necessarily be visually appealing, although it should be. But there are a bunch of people who read it simply because that's baked into their habit, and you're used to, waking up, having that with reading the paper with your coffee, etc. A newsletter that's visually appealing, and which is where the ads came in. There's like a very clear brand promotion. It's also not that they're being subtle about it or something, but that's not affecting the content they're doing. Also, because it's not like these newsletters are doing sort of investigative work, at least the morning crew. The point there is to aggregate things around the world, to pick up on interesting trends, to sum up what has happened the previous day. That For that, an advertiser funded model works quite well.
Yeah, no, thanks, Sriram, for that context. I think even from a larger perspective, I think one final question as part of this section would be we've spoken about monetization and some of these other models. So it seems like there's lots happening. Have you covered any pieces around the VC interest in the media space, as in how is that developing? If at all there has been any movements over the past year?
There has been, but we see interest in the media spaces of a slightly different kind, where they are more interested in, short form content. And I'm not even necessarily saying something like a TikTok, but something like an InShots, where News in Shorts has, very good investors. They've raised a pretty decent chunk of money, or something like a Daily Hunt, which again aggregates news. That is the kind of place where VC money has gone in. Of course, guys like the Ken and the Morning Context have also raised money, but you could also say that it is these other models which have picked up, and got more traction. I mean, that being said, I'm a journalist, so I would obviously prefer the journalistic platforms. But from a VC standpoint, they are looking at, VCs want companies that can grow fast, that can give you that hyper growth, which can give you, that billion-dollar valuation, and can really become, say, that dominant platform. A new age journalistic platform may not be the best way to do that. Like from a VC's point of view, I'm just playing devil's advocate. He could say, I'm sure you're doing very good work. The quality of your work is very good. But are you going to grow 400% year on year? Possibly not, which is why the VC money goes into something like, say, an InShots.
No, that makes sense, and I think it's a good segue to my next question. I think, I mean, let's deep dive into some of the VC sector news that you've been covering as well. I think it's been an incredible year in terms of numbers. So obviously, about more than $35 billion raised, about 1,300 deals that have been secured, which is 30 to 40% more in terms of deal counts as compared to last year. How do you look at all of this? I mean, this is the year 2020 and 2021 where we've seen a lot of impact in terms of general public and macro sentiments given the pandemic. But I think there have been crazy amount of liquidity in the VC space, and about 40 unicorns in India. I think you touched upon that $1 billion valuation too. So how do you make sense of all of this?
It's been an unbelievable year, no matter how you look at it. And one thing that I've been trying for the last few months is I keep trying to recount conversations from last year with my sources that what did anybody predict that 2021 was going to be like this? I keep asking myself because you ask people routinely, what do you think the next year is going to be like? What are your expectations, etc. I can't remember a single person telling me that, trust me, it's going to be wild, that there's going to be this much money coming in, and which just shows how unprecedented this is because VCs, top founders, their LPs, they're really clued into things. If anybody would get early signs, it's them. But I don't think anybody was able to tell that there would be this extent of liquidity until it actually happened. Like by February, all of us knew that something big is happening. Although even then, if you ask 35 billion, I don't know whether somebody would have really even taken that seriously. So yes, it's definitely been an unbelievable year.
Right, and even in the India context, right? I think there's been an explosion of sorts with growth. I think do you see any kind of insights into has tier two, tier three cities kind of contributed to that growth too? Because I think we're seeing that movement from metros to even smaller towns in India with respect to venture deals and with respect to talent hunting. Right? I think VCs are now more open and kind of understand that talent can come from anywhere, innovation can happen anywhere. And in this connected world, do you see that is also kind of a factor? I mean, have you come across instances where that's been very relevant?
That is what people are betting on, Dinesh. So if you ask any VC or actually even any founder that why you sort of big on India, why you investing here, they'll be like, we're looking to get to the next 500 million internet users, the next 600 million internet users, and therefore by default tier 2, tier 3 and beyond is the opportunity there. That said, and this is something I referenced in one of my stories, if you ask me why have startups raised so much money this year in India, I think it has a little more to do with external factors, which is, a regulatory crackdown in China, excess liquidity, and, some companies in India finally maturing rather than suddenly the consumer base going up. So, if funding has gone from 10 billion to 35 billion, has consumers really increased that much? I don't think so. At least whoever I've spoken to hasn't been able to say that. Because even anecdotally, whoever I've spoken to, tier 2, tier 3, tier 4, people who are using the internet, they are mostly using WhatsApp or maybe a Facebook. Are they really transacting, which is what most of these platforms want? So, do those places give you a significant number of e-commerce users? I'm not quite sure. And of course, the caveat here is, of course, there are those people, but is it big enough to justify this kind of funding boom, this kind of valuations? That's the lens I'm coming from.
Right, right. And one final follow up to this particular question is this sustainable? I mean, from your conversations with all the LPs, all the founders, all the funds. I mean, do you expect this momentum to carry all the way up until end of 2022, or do you see that changes in macroeconomic factors will lead to slowing down of deals? I think we've seen certain indicators where deal sizes have started to come down, valuations have started to maybe come back a little bit. But do you see this consistently going up over the next year?
Will it go up from 35 billion is a hard one. It is not entirely impossible that it'll go to the 50 billion because you also have to remember one thing. If you look at the number of deals and the kind of rounds we're seeing, most of the money, as is usually the want, has gone into the same companies. So it is the same companies which have raised 4 rounds of funding, 5 rounds of funding in a single year. And companies are finally able to absorb that much capital. A few years ago, if you gave some company $1 billion, they may not even know what to do, except say a couple. Today, that pool has suddenly expanded. There are potentially, 50 companies which can raise $1 billion today and will have an idea of what will we do with this money, which is why funding can actually go up. That said, you have to look at the fundamentals at the end of the day, right? I mean, this is a question I still had as a journalist, and I don't have a convincing answer to it yet. Where are these many users? I mean, where is that kind of growth, to justify these kind of valuations? The flip side, and I'll try to answer my own question, is that, VCs and founders are betting on the future. They're saying that as of today, it may not be like this, but we're betting that, the India growth story for the next decade will be what happened to China the last 15 years. But so far, there hasn't been that much evidence of that, of per capita income rising to that extent, or that many transacting internet users. So those are the questions I have. Which is why I do have my question on sustainability. If that's a concern you have, I share that concern.
Hey Sriram, I mean, just to segue into, I mean, this naturally ties into some of these VC funded companies that are eventually going for their IPOs, right? I mean, the investors ultimately want an exit, and it's increasingly in India. It's like now we are like seeing a phase where some of these companies are finally able to IPO. Like an exit clause, maybe 2 3 years ago, was just something that a VC would have on paper. So I mean, how are you seeing, say, a PTM or a Policy Bazaar IPO? Because I mean, even though the companies have listed, the VCs have gotten their exits. It's not like there has been a lot of demand in the public market for these companies. There's a lot of talk about, say, a mismatch between private company valuations and public company valuations, right? Do you have any thoughts around how this mismatch could potentially, I mean, going into the future, this mismatch could resolve itself?
I'm glad you brought up the IPO bit because actually I didn't address that earlier. I should have. The tech IPOs are one big reason so much liquidity has come in. Because for the longest time, LPs and VC funds, their biggest question was where are the exits? You've put in all this money, you have some paper markups, the opportunity is great, all that is fine, but where are the exits? Especially after being invested in India for 10, 12, 15 years, it's time to, show actual cash returns. That is finally happening. It's also interesting to note that in some of the IPOs, even early investors haven't sold much. In some cases, they haven't sold at all. And so they've stayed invested in companies even when the company is going public, which means they are genuinely betting that this will grow even 3, 4x, 5x from here, which I think is a very interesting bet to make. As to your question on, sort of, you were saying expectation was a reality, right? Private versus public markets. On that, even the good companies in the US are always overvalued. So I would think that by traditional metrics, some of these will stay overvalued. The question is to what extent. Like if you just benchmark it to other food delivery companies, Zomato looks extraordinarily overvalued. Even if that comes down, it will still probably stay overvalued compared to other companies of its domain or compared to other companies. You shouldn't compare to offline companies because that's an entirely different world. But I don't know whether we will ever come to a place where somebody will say for a good internet company that this valuation is justified. It's also a very sentimental thing, no? I mean, what retail investor can really say, yeah, I get this company's valuation. This company's valuation makes sense to me. That's possibly what, a lot of people want to say, but it's hard to say that.
No, absolutely. I think public investors will take some time to come around to the idea that some of these companies may not make any profits for some time to come, and I mean that those profits can, when they come, might be windfall profits, but it might. I mean, they're probably not going to see the cash immediately. So I mean
Correct.
that is something that in public investors I think will take some time to come around. But again, we saw this in the the tech crash of the 99 early 2000s, and I mean ultimately people have come around to seeing these as reasonable legitimate businesses, right? So I mean I hope that's the long term sort of um,
No, and
you
Viraj,
know
to add one thing there, Airbnb in the US has a market cap of over 100 billion, at least last I remember. Now, is Airbnb really worth over 100 billion? That's a big number. I mean, our top companies, the likes of RIL, TCS, etc., were at 100 billion, like possibly before like this crazy public market boom. 100 billion was the standard for like the biggest company in India. And that in the US is an Airbnb, which has just gone public. There are at least probably 50 companies at least which are even bigger than that. So if you use it to that way, but that said, Airbnb is one of the much better regarded companies in the valley, where it's not had too many governance issues, where it's fighting for a real market, where Brian Chesky is regarded as a good, he manages the stakeholders well. So valuations also bake in all that.
Yeah, and I mean, ultimately, liquidity contributes to everything. You can have, say, a Nicola which had no product but still had uh, insane valuation. Really. So, yeah, I mean, fair
Exactly.
enough, fair enough. So, one aspect, that a lot of people that we speak to are curious about is, I mean, where is the money coming from? Who are the major LPs? In these funds who are committing capital, are they sovereign wealth funds? Are they pension funds? I mean, how is all this money flowing from like flowing into these funds, right? Do you have any sense of who the largest sort of LPs are in the space over the last year?
A valid question, Viraj. I can throw some color, although possibly not as much as you would like me to, or even I would like to, because VCs are very secretive about their LPs and those connections. They consider a lot of that confidential. But a lot of it is mostly in the public domain, which is that university endowments, pension funds, sovereign wealth funds, billionaire family offices. These are the general LP categories for most funds. So the likes of a Harvard endowment or a Yale endowment are an LP in, and I'm talking about the multinational funds. For the Indian domestic fund, they're a little different. It's sometimes family offices, it's sometimes corporate balance sheets. That's where the money is coming from.
So these are all potential sources of patient capital, which would then suggest that at some level, this boom may not be as unsustainable as some people make it out to be.
Correct.
But again, I mean, that we'll have to wait. Time will tell the answer on that one.
Oh no, Viraj,
Um,
that's a good point. They are sources of patient capital, which is why when we talk about boom or crash, we have to be a little more specific. I don't think there is any chance that from 35 billion this year, we go back to 8 or 10 billion next year. That will be a genuine crash. And I think everybody would be surprised. If we go to say 25 billion, that may still be a good outcome in the larger scheme of things because it still means overall we've grown. So from 35 we go to 25, but that 25 is still way more than the 10 from 2 3 years back.
Fair enough. I mean that sounds reasonable. Hey, Sriram, let's address the tiger in the room. Really, I mean, this was the year of the tiger. You had one firm you know, creating unicorns basically pretty much every week, right? You have been following Tiger Global pretty closely. You've been writing about them for a while. What do you think of them, Sriram? What do you make of their approach to, what they're doing to our markets, and what like generally their approach to investing globally, but specifically also to India?
I have been rather fascinated by Tiger, also because I mean I cover the VC industry, so anything that affects that industry is something that always interests me. And one thing that I had even said in my story was VCs have had a very complicated relationship with Tiger this year. Tiger is the firm that has given them markups on their portfolio companies that no other investor would. Tiger is also the company that has taken away hot deals from them. And Tiger is also the firm that is making them reassess their own business model. Because everything that VCs have held dear of spending time with companies, wanting to be a partner, not just an investor, not just being a money bag. Tiger is saying, yeah, no, I don't care about any of that. Here's the money, here's the valuation you want, you go build. And they're just having so much money to compete with across so many deals. It's very hard for anybody else to not react to that unless you have an absolutely well heeled, tried and tested strategy to combat that. So, which is why every fund has been worried about Tiger. Every fund has had, and every company's board of directors, which has VCs and the founders, has discussed Tiger as a concept to say, even if we are not talking to these guys, how exactly should we be, reacting to the situation?
Yeah, I think you rightly touch upon the word concept here. And, the popular, say, perception around everybody right now is that, Tiger and some of these larger VCs are deploying capital at such a high pace. I think they're probably not doing as much due diligence. And that might be like a wrong misconception, right? So they're indexing the VC ecosystem, trying to bet across sectors, etc. How do you look at that? I mean, we've read about how Tiger's got relationships with some of these consulting companies for due diligence, which helps them be faster. Have you seen that kind of uptick in terms of behavior with Indian VCs as well? I mean, well, for a long time now, Indian VCs have kept due diligence in-house as well. But with Tiger now doing all sorts of things to increase space and use space as a mode, do you see that Indian VCs are also picking up on that behavior?
Yes, because they have to react to what Tiger's doing. They have to stay competitive in the market, which is why VCs realize that they have to be very fast in what they do. And again, to touch upon Tiger, it's a little unfair to just give a blanket statement that Tiger's going crazy. Because if you properly look at what they're doing from Tiger's point of view and its LP's point of view, they're doing a fantastic job. Because with this much money, they're doing exactly what they should be doing, which is get into the best companies of the era. And if you're just betting on the economy as a whole, not on a sector, not on a company, not on a particular thing, you're betting on the internet economy as a whole. Because they've taken bets, in multiple companies in multiple sectors. So, which means you're betting properly on the economy. If you're betting on the economy, then valuations are possibly not relevant right now from Tiger's point of view. Because they are saying, see, we are betting on this very, very big picture. All of this will definitely play out. Some of this will play out better than what we expected. Some of this will play out worse than what we expected. But net net, we think we'll be fine. That's the approach they are taking.
Yeah, I mean, but what do you see the longer term implications for this being? Generally for the ecosystem, because we are sort of seeing Tiger do today what SoftBank used to do 2 3 years earlier. Right? They'd end up pushing up the size of the deal round. They'd end up pushing up the valuations. They'd sort of crowd out some of the smaller funds who could potentially have added value to these companies. And I mean, it generally ends up crowding out a lot of the market, right? Because most people can't really keep up with either their pace or the valuation or the amount of money, simply that they pump into the ecosystem. There are bound to be some longer term implications to this general approach to the ecosystem. Do you have any thoughts around that?
Can you just summarize that again? The question?
Um, So basically, what I'm getting at is even though this is a new model, there are implications of this model that end up, affecting the ecosystem as a whole. You have because they end up pushing up the size of the round, they end up pushing up the valuations. They crowd out a lot of the smaller funds in the space, and I mean ultimately in the VC space, you need more people to come in to sort of help the company grow, right? It's not really helpful if you end up crowding out a lot of the other VCs in the space. Do you have any thoughts around that on how Tiger could potentially adversely affect the ecosystem because of the way they function?
That's a great point, and it's an overall question as well, which is what is the downside of this funding boom? Which is that investors may still be fine irrespective of what happens because an investor has so many investments. A couple of them may do well, a couple of them may not do well, and on an overall portfolio level, you may be looking fine. A founder has only that one company he's building. If he's taking this aggressive bet to raise at this valuation, to what extent can he justify that? Again, so many of the companies that have become unicorns this year, and so many of the companies that are super hot are also run by very young founders. Some as young as 19, and in many an average age, say below 30 or below 35. In that case, how do you deal with the sudden deluge of wealth? And some of this is paper money, but even then, does it change your perception of yourself? And I know I veered away a little from your question, but I am just thinking about basically the downside and the second, third order effects of this funding boom, which is also what Tiger is a very big part of, which is all of these could be unintended consequences. So what happened to WeWork was, because of Newman, but also a result of the ecosystem. It's because of the investors who gave him money without doing diligence. The public market investors, like mutual funds, like T. Rowe Price, have gone and given WeWork money because of FOMO. The more and more we see that, that is what will be the real challenge for this ecosystem.
Right. And one follow up there, Sriram, is I mean, what will be like one advice that I mean in this whole funding spree and valuation rounds? I think founders would obviously want high valuations, but is that even a given? I mean, should founders look at this whole time frame as a time frame to consolidate a lot of things and develop their understanding of the VC space? And what should be one advice that you would like to probably give out to some of the younger founders who are listening to this podcast, right? Some of our audience who are at Rainmatter or applying.
So
Yeah.
Dinesh, I'm honestly nobody to give
Right,
any
right.
advice to founders, simply because I've
Correct.
never run a company myself. So it will be, shooting from the hip. The only thing is that, and which goes down to just every individual, founder, non-founder, you should know, you should do what you think is right and what are the decisions that you can live with. There are some founders who are okay taking a certain level of risk because that is how they are wired. They're playing that zero or one game. Like there are founders who are like, Masa San or SoftBank, where Masa has, had that sort of rags to riches stories like three times, I think, where he's had a lot of money, then he's almost lost all of it, then he's again made a lot of money, then he's again almost lost all of it. Now, is everybody up for that journey? Because if you're raising money at aggressive valuation, that is possibly what you're signing up for. So that is the only question you should be asking yourself. And that's what it's very easy to criticize, money at high valuations for unsustainable companies. But each individual deal, each individual company has its own justification. And some of those are not very dumb. Because again, it boils down to what the founder thinks may work for him. So as a journalist, I may not agree with that. As a VC, some other VC may not agree with that. But he has his own way of thinking about things. So if he says that I think I have a shot at building this massive company and I am going to make use of every valuation, every aggressive valuation round I get, that I am going to optimize that to the last penny, then okay, that's a decision he's taken, but he should know the downside of that. So he should also know that there is the other side of risk associated with that. He has to grow at that rate year after year. He has to put that much pressure on his employees. His hiring has to be that good. You just have to be clear of the decision you're taking and clear of the second, third order impact of that.
Yeah, no, absolutely. I mean, that is one concern that some of us have, at least in our private conversations, about do the founders really know what they're getting into, what they're signing up for, and that there could potentially be downsides in the long run. Because I mean, in a sort of feeding frenzy, you have everyone thinking that they have ideas that could potentially go to the moon, right? But there are downsides to everything. So I mean, we have discussed this internally quite a bit. But yeah, Sriram, I mean, that was a very nice answer. Thanks for that. So if you can just sort of segue into, what are the trends that you personally are seeing over the last year for how funds are behaving? What are the sectors that they want to get into? What are the sectors that seem really hot? Fintech is one. We have been exposed to that, but generally, I mean, your thoughts around uh, what you see happening in the ecosystem.
I was just discussing this with a VC a couple of days back, and this was actually a question that was, say, perhaps more relevant 2, 3 years back, because there were some sectors that are hot. Now, when there's been $35 billion pumped into this economy, every sector has got more than its fair share of funding. So, which is why asking which is the hot sector is, there's almost no answer to that, because every sector is hot. B2B is hot, SaaS is hot, D2C brands are hot, marketplaces are hot, fintech is hot. In fintech, wealth tech is hot, lending is hot. So, I mean, what is not hot? Maybe travel and hospitality because of the pandemic, but maybe that's about it. Which is why this sectoral thing, which I also look at from time to time, it's becoming harder and harder to ask that question simply because everything is hot. It's hard to say that nobody is looking at this sector right now.
Got it. Got it. I mean, I think we've discussed this funding and the whole buzz around the VC space for the past 10-15 minutes. And one final question to just wrap it up. I think one additional say aspect to consider now is, I think, the rise of the micro VCs. Right. I think the lot of these startup founders, a lot of smaller funds, a lot of smaller LPs who are now trying to come into the capital market space. And at Rainmatter, we kind of believe that's very important for India to grow as well and India to sustain as a VC landscape. And what are your thoughts around that? I mean, we're seeing a lot of founders deploying capital. Do you think that will have a lot of material impact, say, a few years from now? Because I think these founders really understand how companies are run. I think for getting funding from them, do you think will make it very advantageous for some of these younger founders, younger startups coming up? Because I think they understand the context. I think, what are your thoughts about that? I mean, have you had conversation with founders and VCs around this piece?
Actually, yes, if founders are able to get good angels on their cap table, other founders who've really built out companies, other founders who've really seen the grind of building a company, it is extremely helpful to them. Where very often it may be their brand name VC who's contributing a lot of the capital, but it is their angel or their almost mentor who they're going to for advice. To say I'm facing this challenge with hiring, or I'm facing this challenge with execution, or this one particular thing isn't working. So which is why all these experienced founder angels can be very, very helpful in that context. The only thing is that founders should also be able to, as in the angel who's investing, he should be able to give out that much time to founders. And I think most founders do. But the exception is someone like Kunal Shah, where he's made it clear that he's sort of, doing this almost pro bono, and he's going to write every angel check he can, but he can't spend time with all his portfolio companies. No way in hell. So that is a trade-off that he's making. But most other angels, I do think they spend time with companies and they want to spend time with companies, because angels who are investing in companies are also doing that not necessarily for making money, although that does happen in many of the cases, but because they want the front row seat to the next era of development in tech. The guy who's built a $3 billion company is now an active angel because he wants to be in on the story of the next $23 billion companies. That is what they are really looking for.
No, absolutely. I mean, some of them also talk about, giving back to the ecosystem because they got really lucky. And I mean, that's a very noble sentiment. But I mean, yeah, that's quite, I mean, it's quite interesting to see this new micro VC angel sort of development that's coming about. Talking of founders, Sriram,
No, and Viraj, 1 second. I realized I didn't address the micro VC angel thing enough. Ideally, that should grow out to be a very interesting and important chunk of this ecosystem, because that's what happened in the Valley, where micro VCs and even solo GPs, just single person funds, are a big deal there. Where like Elad Gill has raised like a $600 million fund. It's one guy. It's a single guy fund. That sort of concept could be very interesting here, because everybody, because personal brands are becoming very important for founders, where a founder is sometimes not looking for the VC's brand or the name of the institution on his cap table, but the person he associates with. Because even at a VC firm, you may raise money from a very good VC. What may eventually tip the scales is who has joined your board from that VC. Because a VC firm may have investors whom you like and investors whom you don't like. And so while the VC firm may have its own brand, what if your board member is somebody you don't get along with? or your board member is somebody who doesn't have the same vision as you.
No, no, absolutely. I mean that. I mean it's said, right, that like a funding round is sort of like a forced marriage that startups end up having with VCs. If you don't really like your VCs, then I mean it's a sort of tough sell, really. But hey, Sriram, I mean, just on this point. So I think a month or two ago, you had written this brilliant piece on how founders face a lot of pressure and a lot of them are burning out simply because of the expectations that are placed on them by the ecosystem, right? So I mean, we had reached out to you then because this was such an important issue that people generally don't talk about that much. Stress and anxiety are very important issues, and especially in a like a boom of the kind that we have seen over the last year or two, we have, I mean, a lot of founders are under a lot of pressure to either perform or perish. So these are, I mean, your article was a brilliant take on that, really. We felt that this was something that really needed to be talked about. Like, what motivated you to do that, Sriram? I mean, where did that article come from? It was.
I mean, I have to be honest with you. The way I got the idea for that article was because I was in this place where I was feeling a little burnt out, where the startup ecosystem this year has just been so crazy. It's also been a daunting time for journalists, for anybody who's covering the beat on a day-to-day basis. There's just so much happening. How do you keep track of things? What should you be doing on a daily basis? How do you still, make your coverage stand out? How do you still be intellectually honest to what you're doing? And how do you just not, become a slave to deadlines? Those were the things I was grappling with, and I was feeling a little jaded and burnt out. And my automatic question was, there are these VCs and founders who are playing a far more higher stakes game than I am. If I'm feeling burnt out with this, I'm sure they are as well. And that's where that came from. Which is why I started asking founders, hey, in this environment, how are you not feeling burnt out? And a bunch of them were like, yeah, you're right, we are feeling burnt out.
Yeah, I mean, I think you did a service to the ecosystem by generally bringing up this issue. So, yeah, thanks for that. Um,
No, of course, no, but Viraj, it's also important to note the other side of that, which I also said in the story. There are a bunch of these founders who are getting burnt out, and like you said, the pressure from the ecosystem. There are a lot of people who are also doing it very willingly because their view is that this is a once in a lifetime opportunity to create something big, to make money, to sort of have this unprecedented impact. And if the cost of that is me feeling burnt out for some time, so be it. I've had founders tell me this, which is why their decision making is interesting. It's not that everybody has this pressure put on them and they're, forcibly doing this and that's why they're feeling burnt out. For a lot of them, it's also voluntary. They almost see that as, something that's unavoidable, but oh well.
I mean, yeah, I think from a larger, say, broader point here, I think it's also great that we've seen so many more people also talk about this mental health and some of the, say, finer aspects there, right? And it's always nice for younger founders to know that there's always support and there are always best practices and to dos in terms of talking and speaking to the people in your community and network, etc. So I think that piece kind of we spoke about it internally too, and we're quite impressed about how. I mean, would we have expected Indian VC ecosystem to talk about this a few years ago? Or maybe not. But I think this whole development over the past year has led to talking about some of the difficulties found this space too. So it's been very nice. And just segueing into the next question, I know, I mean, there have been challenges and there have been some of these difficult times for founders with anxiety and stuff. But I'm sure with your conversation around so many of these funds and startups and founders, I'm sure there have been a lot of funny stories and a lot of funny anecdotes that you can probably share. So anything funny, anything interesting that you would like to share with our listeners?
I mean, for me, it's funny from, an ironic standpoint. Like for me, it's very interesting to observe how founders evolve as the company grows. There are some folks who are, exactly the same when they're raising their seed round and when they're going public. And then there are other folks who are very nice to you when they're raising their seed round, and the moment they get a hot VC on their cap table, are very difficult to talk to, and outright lie and obfuscate information. From a certain standpoint, that's a bit funny, although frustrating. One thing I remember is the constantly funny thing actually is to explain this ecosystem to anybody who's not in it or who doesn't get it. Like one of my VC sources, he describes this internet economy as a parallel economy, which is generally used in the context of like black money, etc. But he's genuinely like, this is a parallel economy because this just works in a completely different way than the rest of the world. This thing of hyper growth and this much money coming in and rapid hiring and rapid scaling up and big IPOs, it just works in a way that most people who've built a traditional business or have been part of the traditional economy, struggle to understand. Which I think is a little funny because once something is so big, you think it would become mainstream and everybody would get it. But even now, there are lots of people who are absolutely stymied by everything that's going on. There are lots of people who see every unicorn announcement and think, "ये तो fraud है." And that "ये तो fraud है" is a blanket answer.
No, thanks for that. Hey, I mean, last couple of questions before we wrap up. It's been a very insightful 45 minutes so far. So let's do something fun. Why don't I? Let's do a rapid fire round. I mentioned like a few sort of themes or niches, and I mean, why don't you give your take on them in terms of like the first word that comes to your mind when we talk about it, right?
Man, I'm not the guy to give takes. You should get a VC for this. But okay, sure,
just the first like word that comes to your mind, really, when, like, given your experience covering the space. Let's
sure,
um,
sure.
think of it like a rapid fire round, right? So okay, so I mean, let's start with our space. Generally, wealth tech and capital markets. What's the first thing that comes to your mind when you hear of that?
If they're all doing mutual funds, how will they make money?
Okay, okay. How about neobanks next?
All the existing banks are trying to amp up their service. So how will these guys really make it big? That's a question I have.
Okay, what about the ed tech space?
Again, the first thing that comes to my mind is this very fundamental question. You're solving for distribution, but you're not solving for.
One sort of phrase,
Acha,
Sriram. Let's try
okay.
to keep it fun for our
Fair, I know,
listeners.
I know. Where is the quality of teaching?
Okay, great, fair enough. Again, the interesting sort of elephant in the room. What are your thoughts on crypto?
I should have invested earlier.
I mean, that's the common feeling there, isn't it? Okay, last one for this section. Um, Again, sort of segue from crypto. What do you think of all the talk about Web3, augmented reality, metaverse, and so on?
It's a lot of talk. It's a lot of talk as of now, and that's it.
Okay, great. Sriram, I have to say a lot of your answers here were similar to answers that our own opinions that we keep discussing internally on a lot of these spaces. So yeah, I mean, thanks for that.
I'm glad to have some of my opinions validated.
Absolutely.
Yeah. So I think the final section, Sriram, I think we'll keep it fun and at least give users, or at least our listeners, a view into your life as well. So can you briefly describe what a day in your life actually looks like? I mean, this can be for prospective people coming into journalism, trying to follow the space. Can you give them a little bit of, say, a very quick bite about highs and lows and challenges and opportunities there?
Yeah, it is. I mean, I'm glad you used the word highs and lows because that has been my biggest challenge. This is a profession of incredible highs and incredible lows. So there are days where you're just having very good meetings, you're getting good story ideas, you're able to write well, you're able to articulate your thoughts well. And those are the days you feel on top of the world. You really feel like, okay, this is what I'm meant to do and this is what I'm good at. And the fact that somebody's also reading this, somebody's finding this interesting, that's what makes the whole thing relevant. But then there are days where also when nothing's working out. You're trying to get, say, a lead confirmed. You've spoken to 10 people, nobody's saying anything. There's somebody who you know 100% is lying, but there's not much you can do about it. Then there's somebody you reach out to for a query, and the guy will leak the story to a publication of his preference without even telling you. And so those are the downsides. So which is why it is a profession of incredible highs and incredible lows. It's hard to treat this like a corporate job or like a 9 to 6 thing where you just you do it and you go away. Like if you really want to do this, you have to be like really invested in it and really like what you're doing. Because otherwise, you can end up questioning sort of what is the point of this.
Right. I mean, that kind of gives, I think, a lot of these aspiring journalists, I think, a breather, right? Because I think people kind of take these failures to heart sometimes. And I think, you talking about these highs and lows being consistent, I think it's quite nice for all the aspirants. What?
No, correct. You have to get used to it at some point, and
Correct.
it's very hard. Even today, I mean, there are times when I have a bad day and I have to tell myself that it's just one day. Like tomorrow can be different. Like because Because then I have this bad habit of generalizing that, man, this is what this is like, then what is the point even? And then you get all unnecessarily cynical and existential.
Correct. Correct.
But then you have to remind yourself there are also great days. And it's not that I have done something particularly astonishing to have a great day.
Right. Right.
You have a great day because, well, you've had a good day. Like, life has been nice to you.
Correct. Correct. I mean, yeah. I think we also believe that luck plays a huge part in all of our lives anyway. So I think that kind of puts everything in context. And one final
Correct.
question. I think can you give us a couple of books you read recently that should be interesting for all of our listeners? Any podcasts that you usually follow, and anything at all, any resource that our listeners should probably tune into.
A very good podcast that I like is Pivot, which is hosted by Kara Swisher and Scott Galloway.
All right.
It's one of the only business podcasts I listen to. I mean, I want to listen to a lot more, but I also like something that's a little light and conversational.
Right.
Like where they discuss very good stuff and they have very good insights,
Right.
but there's also this banter between the two of them, which I really enjoy.
Right.
And that is often what I'm looking for. So I tend to over-index towards that.
Got it.
So there may be like some great podcasts which has fantastic content and takeaways, but which may just be presented in a dry manner. That's not always ideal for me. In terms of books, I mean, I've read an interesting set of books this month. So right now I'm reading like this book about the show 30 Rock. 30 Rock is one of my favorite sitcoms. And this US journalist called Mike Rowe just wrote like an insider account of the show, which is, how it was conceived, what every season was like, insider stories, anecdotes, etc. I'm really enjoying that. Like, just take any sitcom that you like. Wouldn't you like a book that was dedicated to that sitcom with insider stories, interviews, etc.? So from that standpoint, it's been quite nice. I'm also reading The Hard Thing About Hard Things, by Ben Horowitz. Something I think I'm the only person in this ecosystem who hasn't read it. But that's also something I've been quite enjoying. Like because he's written about his personal story and facing the tech boom and crash, etc. So it's told in a very compelling manner.
Yeah, no, absolutely. The Hard Things About Hard Things is one of the books I also recommend to people. I think it talks a lot about culture as well, right? I think how the journey of a founder to a VC investor, I think, is quite compelling and actually comes out in that book. But yeah, no, I mean,
Correct. No, and it's not, I think what is working for me with that book is he's not given advice in the way that he's propagating advice, like a self-help book. He's told a story, and from that there are also these takeaways that he has.
Right, and yeah.
So you are still drawn to the story.
Correct.
Rather than say like some typical, productivity hack manual.
Correct. Yeah.
Which may give you those productivity hacks, but there's no larger narrative to buy into.
Yeah, no, absolutely. I think his other book is, What You Do Is Who You Are is also like a quite a nice read for all the founders and younger startups, right? I think talks about all
Correct. Yeah, that's also on my list. I have to check that.
I mean, it gives a nice historical perspective about culture as well. So I think that's also one other book. Now that you said Ben, I think I kind of remembered that. But yeah, I mean, quite nice.
Okay, guys, I think that brings us to the end of our podcast. This was a very nice sort of recording, Sriram. Thanks for that. I hope our listeners also benefit from the insights that you had to share on the ecosystem. And yeah, thanks. Please follow Sriram on Twitter if you guys already aren't doing so. Thanks for your time, guys.
Hey, really appreciate it, Sriram. Yeah.
Thanks a lot, Vidya. Thanks a lot, Dhiren. This was a lot of fun. Thanks for having me.
Hey, same here. Cheers, huh? Cheers.
Thanks.
This show is intended for learning and informational purposes only. Please don't construe this as investment advice. All statements made on the show are the individual opinions of the host and should not be considered as official statements made by Rainmatter or any of its associates.